the Vanguard Group, Blackrock, State Street, they're all buying more SOFI. So the largest asset managers in the entire world, the most prominent, most respected asset managers in the entire world are buying more SOFI here. So to break this down individually, the Vanguard Group increased their holdings by 6%. We also saw BlackRock increase their holdings by 6%, and we saw State Street increase their holdings by 12%. So the number one holder by far is the Vanguard Group. They hold about 73 million shares. So definitely a decent holding there. And then to list off a couple more names here, we saw Morgan Stanley increase their holdings by 86%. We also saw Citadel increase their calls. They own calls here, so they obviously just own options. So they increased their call position by 80%. And then we also saw them decrease their puts by 7%. Given the fact that they own calls and puts, that kind of tells me that they're really betting on volatility more than anything. But at the end of the day, they have more calls than they do puts. So that definitely signals net bullishness. And then we could see also JP Morgan increased their holdings by 51%. Goldman Sachs increased their holdings by 200 or 2,400%. So obviously, excuse me, that was puts. They had bought a good amount of puts. That was Goldman had bought 5 million shares worth of puts, and then they basically have 5 million shares, in straight up equity, to kind of play off those puts. So Goldman is net bearish there, and then we could take a look at Bank of America. Bank of America increased their holdings by 109%. And then Northern Trust increased their holdings by 9%. So, pretty interesting moves here. Balyasny Asset Management, they actually bought into the stock for the first time. But they actually sadly, they just bought puts. They bought 2.5 million shares worth of puts. GPI Capital bought 2.8 million shares worth of puts. So there's a lot of prominent investors diving headfirst into the stock, but there's also a lot of hedge funds kind of playing the short side of things, which I thought was somewhat interesting. But overall, the most notable moves are the big boys is, really the fact that Vanguard, BlackRock, and State Street are buying more shares, which is definitely a good thing for the stock. And then with that being said, though, let's take a look at this recent article written by Stone Fox Capital, who makes a lot of good points about SoFi, really talks about that the stock typically does drop after a good earnings report, which I thought was kind of interesting and definitely was supported by history. So let's read through this. So SoFi has consistently collapsed following strong earnings reports, leaving the stock trading below that $10 SPAC deal price. And back following the Q4 2022 earnings report on January 30th, SoFi soared to a multi-year high, topping $8. The fintech beat analyst revenue targets by $17 million, and the stock completed a nearly 100% run from the current lows in the mid-4s. Within no time, SoFi was back trading below $5. The moves are hard to explain other than analysts, kind of just wanting to value SoFi like a traditional fintech, while other companies continue to produce the financials like more like a growth stock. Or excuse me, while SoFi, kind of when you look at the numbers, they look a little bit more like a growth stock. SoFi, just is a bit more growthy than analysts are kind of hoping for. And then let's talk about the mortgage boost here. So while the market is focused on the opportunity in student debt repayments restarting in October, some people call it an opportunity, some people call it a headwind. But the real catalyst for SoFi could be a massive mortgage debt market. At the end of Q2, the New York Fed reported total mortgage debt of $12 trillion at 7.5 times larger than the student debt of $1.6 trillion. SoFi just bought a fintech mortgage lender to gain technology to expand further into the mortgage loan market. The digital bank only originated $90 million worth of loans back during Q1, and that amount jumped to $243 million in Q2 of 2023 with the addition of Wyndham Capital Mortgage. The financial services segment continues to grow faster than the lending products, as the total financial services products jumped 47% in Q2. We can see that graph kind of laid out here. We can see that that's definitely been growing pretty significantly. And then financial services revenue surged during Q2 to $98 million for a 223% growth. The segment is a big contributor to the improvement of the profit picture, with the continuation loss improving by $49 million year over year to a loss of only $4 million. So that is kind of a couple points I wanted to make, and one of the better ones I think that was made was the fact that the stock typically does drop after bullish earnings. That's just, what history is telling us here. And then let's take a look at the financials for the company, and then, like I said, I'll give my price prediction at the end of the video. So we can see here that obviously PE isn't positive. We aren't a profitable company yet, but we do have a price to book ratio of 1.5, which means that the market cap is 1.5 times the book value of the company, which is actually basically in line with the financial sector, which is honestly a pretty good number because it's definitely a tough comp to the financial sector, given this stock is a bit more of a growth name in reality. And then revenue growth is 47% year over year, and that is well above the financial sector of 7%, that median. And then revenue growth over the next 12 months is 35%, which is well above that sector median of 5%. So growth numbers are definitely rationalizing that, exuberant evaluation, right? And then gross profit margin is at 81%, which, for those that don't know, this gross profit margin basically just tells you what a company makes for what it sells. So this is simply telling you that the company is making a good chunk of change once it sells its goods or services. This is really just revenue minus cost of goods sold. So this is basically just a good measurement of profitability for a company. And then we could take a look at this $3.18 cash per share number. So that tells me that basically roughly a little over a third of the market cap is in cash, which definitely signals that the company has a pretty strong balance sheet. But before I kind of say that they have a fortress balance sheet, let's take a deeper look. So we have $3 billion in cash, yes, but we also have $6 billion in debt, meaning that we have $3.5 billion more debt than we do cash. So given the company has a net operating cash flow of minus $9 billion for the past 12 months, it's safe to say that the company needs significant cash on hand to fund its future operations. So they have some cash on hand right now, but they're definitely going to have to figure something out, whether it's issuing new debt or issuing new shares here, just to kind of increase their equity and increase their cash holdings. And then Ally Financial and the other peers also have similar balance sheets, just more debt than cash. That's very typical within the financial sector. And then we can take a look at the profitability metrics here. So profitability, 81% for SOFI is pretty good, but when we compare it to the other financials, they actually are looking kind of poor. But at the end of the day, it's kind of tough to compare SOFI to financials. It's really just, Ally is kind of the closer peer here. But then we see net income margin at minus 10%, which is actually the worst amongst all peers. And then revenue growth. So revenue compounded annual growth for the past 5 years has been 24%, which is significantly above Ally and all peers. And then price to book is 1.5, which is actually in line with most of the peers. And then PE, so non-GAAP PE is actually projected to be at 28 times in year 3, so 3 years out. So this is pretty good, right? Definitely signals that the company is projected to be profitable pretty soon, and definitely has a roadmap to profitability, which you love to see as an investor. And then with that being said, let's take a look at the analyst ratings to see what Wall Street thinks about this stock. So we obviously saw, kind of the big boys buying the stock, State Street, Vanguard, Blackrock, and it's always good to take a look at analyst ratings because those large firms make investment decisions based on what the investment firm's research departments are kind of saying about a specific stock. So let's take a look here. We have 8 different bullish ratings on the stock, and then we have 4 bearish ratings on the stock from 4 different investment banks. So this kind of tells you that institutional research is net bullish, but we do have some firms that are bearish on the stock. Wedbush being one of them, Stevens and Co. being one of them as well. But we also got a price target increase from J.P. Morgan today. So J.P. Morgan increased their price target to $10 from $8, but maintained their neutral rating on the stock. Piper Sandler also increased their price target to $9 earlier this month, but it maintained their neutral rating. Citigroup increased their price target to $12 and maintained their buy rating recently. Mizuho, increased their price target to $15 and maintained that buy rating there as well. So definitely a lot of Wall Street firms becoming more and more bullish on the stock, especially post earnings, which is what we love to see. We also saw Truist maintain their buy rating and actually increase their price target to $16. So overall, this earnings report was bullish according to Wall Street. It was bullish from my personal eye test. So why is the stock falling off? Well, it's falling like it always does after earnings, right? So that's not super shocking. Maybe not always is the right word I'm looking for, but it is typical to see the stock kind of fall off a bit after earnings, so it really shouldn't be a shock here. So with that being said, though, let's take a look at the chart and see if we can't give a price prediction based on technical analysis. So the stock is coming down to support at around $8, which is where shares had bottomed earlier this week. And on Friday, it's also where shares had bottomed on July 7th and in late June on the 23rd. So therefore, I believe this level is a level in which shares are likely to kind of level out and move higher. So we also had topped out around this level on February the 3rd, also had topped out around this level on August and in May of 2022. Past resistance becomes new support. We saw that here. We saw support be confirmed. Therefore, I believe that this support level around $8 likely holds, and we see a move higher for SOFI over the coming weeks. Obviously, barring any major sell-off throughout the market. But we do have bullish momentum in the stock as well. So we're currently above all the daily moving averages besides the 50-day. And we also had the 50-day moving average cross above the 200-day moving average on June 1st, which is known as a golden cross and implies bullish momentum. Also, we've seen as prices kind of dropped from the 4th on, so basically to start this month, we've seen volumes slump a bit. And as you have prices dropping with volume slumping, that implies a reversal in price trend and obviously a move higher in this situation. Therefore, I believe this $8 level holds, and we see a move higher up to $10 over the coming weeks to months for the stock. I picked this $10 level because it is the next level of major resistance. So this is where shares had topped out in June and on July 20th. It's also where shares had topped out in mid-June. It's also where shares had topped out in March of 2022. So definitely is a significant level of resistance for the stock, and I do think we likely hold this $8 level and move higher over the coming weeks to months, as I said. And then I'll take a look quickly at these seasonality trends. So this shows me the average monthly return for the stock. So we can see here that on average in August, shares decline 19%. Obviously only 2 years of data here, not the end all be all, but it is interesting to see that the seasonality trends are lining up for the bears. So with that being said, I think the chart is reading a quite bullish rating right now. And I think the fact that Blackrock, State Street, Vanguard, the 3 largest asset managers in the world are kind of dip buying SOFI here, if you will, I think that's a great great thing for the stock. And given that they all have average prices on like cost basis, like where they actually bought the stock is significantly above where the stock is trading right now. I think that definitely signifies that they are very bullish on the stock. So Vanguard, Blackrock, State Street, they're buying more shares. Should you be buying some? Well, we just went over all those financials. I think the company offers a pretty good opportunity within the financial space. So you're gonna have to make you're gonna have to make your own choice there. But in my opinion, I do think it is a stock that is worthy of some capital within the financial sector. So with that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.